Hi, everyone. Welcome to our first CPD of the year, 2017. Hope you guys had an excellent new year to start with. What we wanted to cover in this CPD is disbursements. We want to mainly talk about what is disbursements, what are some of the do's and don'ts that you want to know with respect to managing your client expense. And the main idea behind this webinar is to kind of get that whole concept out of why you should be doing, why you should be managing disbursements in the first place. So the primary agenda is going to be to explain to you what are disbursements, how to manage them, and we're going to question you, challenge you to say, shouldn't you be doing disbursements mainly out of trust? What are some of the key benefits? Try and establish that. Then we'll come down to disbursements that are actually managed using your business credit card or your pocket expense or general bank, how to recover them. We'll also talk about types of disbursements. Okay, we'll talk about what are the disbursements that you're even allowed to charge, and how you should do it. And at the end of the presentation, we'll talk about the expectations from Law Society in terms of what is expected and how you need to manage and maintain disbursements. So that's what we will cover at the end of this whole CPD. So feel free to stop me with questions. Praveen is also collecting questions. I will kind of go through them at the end if I miss any. We'll also kind of show some demo in the end of how you do this. Okay, we'll keep it like a mixture. But let's get into disbursement at its fullest. So what is disbursement? Clearly, the Wikipedia definition of disbursement is the act of paying out or dispersing money such that you are basically paying for your client's expense initially, the amount that a lawyer might have to pay out on person's behalf in connection to a transaction. So classic example is court fee, for example, you're paying for the client's court fee. You don't expect the client to actually pay for it. You're doing it for him, and the whole accounting behind him is how do you pay and get paid for that. Okay. Now, the basic layman's term view of this is these are expenses that you incurred on behalf of your client at your law office. So at the end of the day, it's up to you to charge him back to get back that money, or how do you want to handle that is what disbursement is all about. The same disbursement definition in accounting term is all about records, making sure that you record what was done and how it was recovered, how it was spent, how it was invoiced, and also making sure that the whole cycle of disbursement is all complete. That's the accounting view of disbursements. And finally, what is the Law Society audit view of disbursement? So when they come for an audit, what are they checking? They're going to be checking for your records. Basically, they're going to make sure that you maintain the books properly. And clearly, what are maintaining the books means every cash or transaction touch point is actually recorded. So the touch point means when you actually had the disbursement, did you record that? Did you record how it was actually paid? Did you record on whose behalf was it paid? These are all some of the things that the Law Society auditors are going to look for. Okay. Let's now get into key aspects of how to manage disbursement and what does it take to manage them. We need to understand both aspects. And what are the key steps? Is it going to be trust or general? How are you going to decide that? Now, the key aspects of managing disbursements are record the disbursement when it was paid. Let's say you went today to the courthouse to actually pay a court expense. You want to record it immediately as possible. Otherwise, you're going to forget it. You're going to lose track of it, and then everything is going to fall apart from there. So recording the disbursement when it was paid, how it was paid. Was it paid using a credit card? Was it paid using a check? Was it a trust check? Recording that how it was paid is very, very important. the reason behind the disbursement, like, justifying to your client, because at the end of the day, you need to tell your client, like, hey, I spent this money for a court fee. Like, telling that is very important. So, recording the reason is also very important. So at the end of the day, you want to say, how much was the amount, how was it paid, and what is the reason behind the expense. You want to record that. The next part of recording is you also want to record the client for whom this whole disbursement was actually exercised for. Like, and what is the matter that was associated with that, and what, the whole relationship between the client matter and the disbursement needs to be established, so that at any given point of time you can pull it out and you can see when it was done, how it was done, do I need to recover, has it been recovered, and making sure that, what you paid, you actually got paid. If it was paid from general account, then there's a little bit more to disbursement recording than normal. If it is trust, it's very simple. You got the money in trust, so you just used the trust fund. So, the first two are more than enough. But it was paid from general, you need to decide what portion of the disbursement are you going to actually put in the invoice. Like, for example, you kind of had a disbursement, that you paid on behalf of the client, and you realize that the client, may not pay. Maybe you'll have to, write off a little bit, so you can only charge a sub-portion of that, right? So you need to decide the portion. Most likely, we want it to be in actuals. That means, you spend $50, you want to recover $50, right? And then you also want to decide, when to send an invoice to the client. First pre-bill it and then invoice it. Make sure that the invoice actually gets to the client, saying that, hey, I had this expense in general, for you, and I need to recover it, and then recover it, get paid for it. Either, if you have money in trust, transferring it, to general, and recording that transfer is very important. Or if the client actually pays, a check, now you can directly deposit to your general and, recover it. And then recording the invoice and the expense recovery procedure, right? When the invoice was raised and when, the recovery really happened is very important. So in general, in trust, there are only, two events, right? One, when you got the retainer, and two, when you actually disperse. These are the only two things you record. But in general, you record far more. You basically record when the expense was made, you record when the invoice was raised, and then third, you record when that invoice that you got raised for that disbursement was actually paid back. So there are three steps extra in general that you need to follow. Now, moving along, when it comes to disbursement, how did you spend the money and what you should record is what we're going to discuss now. The key question is, why would you not pay it from trust? And to us, when you pay it from trust, it's basically, keep it simple policy, right? Because the client has already given you the retainer. It's sitting in the bank account. Why not use that funds to pay disbursements? That way, right, the accounting is simple and, the procedure is simple. Let's take an example. Court fee, other kinds of fees, that you need to pay, land transfer tax and all that stuff. If you actually pay it out of your trust account, you basically are issuing a trust check, right? You basically are creating a trust check, and you're just issuing it to the payee authority. And in record, you just need to maintain that. Basically, you need to say, on this date, a court fee was paid from the trust account. This was the client. This is the matter. And this is the method of payment. That's all you need to maintain. So it's as simple as that. So that's why disbursement, paying out of trust, really makes sense. It's very simple. The amount of accounting that you need to keep is also very simple. All you need to tell your client, is, in your statement of trust saying that, hey, this disbursement is actually paid. You can even, create a statement of trust and just send it to your client saying that, hey, I paid this disbursement straight out of your trust account. So, so that he's aware that this was done. So it doesn't need to be part of any invoice. You have no headache of recovery. So if you look at it from an overall perspective, paying it from trust account is the simplest way to actually pay for a disbursement and be done with it. Now, there could be 100 different reasons why you did not pay from trust. So let's look at the other option. So when you actually paid from general or your business credit card or even from your personal credit card or something personal, that day you were at the court and you had to use your personal, what do you record? the most important thing that you need to record is the date. It's very important you record the date when the actual expense actually happened. The second information that you record is the amount and the appropriate taxes. Like some disbursements have taxes, some of them don't have taxes, and you need to record that. The third thing that you need to record is the method of payment. Was it paid using a check? Was it a credit transfer? Was it like a debit card? Was it a money order? Like, how did you pay? That needs to be recorded. The fourth thing that you need to record is the matter and the client associated with the disbursement. The reason why you need to record that is because if you want to get paid back, you need to know who it is so that you can raise the invoice. Now, if the disbursement was paid from bank, credit card, or your own personal pocket or by someone else, you need to record that too, right? Like, that way, I know the Law Society does not care about that, but at the end of the day, the money needs to go back to that person or that individual who made that payment. So if it's not the business that made the payment, it was your, you who used your own personal credit card or your, legal assistant who used her own method to pay, or even cash was used, that needs to be recorded so that the cycle can be completed with respect to disbursement. Now, when do you recover a disbursement? Like when it was done from trust, there's no concept of recovery, right? It was the client's money, you just used it, and you're done with it. When it is paid from general, the procedure is you need to raise an invoice. Now, before raising an invoice, right, you obviously need to do a few steps. First one is record the information with the date of expense, record the amount that you want to actually invoice with appropriate taxes, and ensure that, if it's not actual, so there's a possibility, then you mark up or mark down, and then you also mark the proper taxes, right? Like for example, let's say a good example is, let's say you bought Divorcemate, and the software license for Divorcemate is $120, and you're passing that down to your client as disbursement, right? Now, because you are a good client, say the company gave you a discount of $20, right, for that license, there's no requirement that you have to pass that $20 to your client, right? So that's like a markup scenario. The markdown scenario is the opposite. You paid for that, and now know the client cannot pay you that much. You can mark it down and say, okay, even though you can take a loss. You can say, hey, you know what, I pay as an expense $120. I know you can only afford $60. And this is what it is, right? You can take it as a markdown. So that's what you need to decide before raising an invoice. Then the next process is you kind of do a pre-bill, make sure that you like the bill, and you make sure that there's not going to be a huge number of issues with the bill, and then you actually raise an invoice. Once you've raised the invoice, the step is to get paid for it. Now, the easiest way to get paid for it is if you have money in trust. If you have money in trust, you're not waiting for the client. You go and do a trust transfer, right? And you say, hey, I paid for this disbursement, and take the money and move it to your general account, right? Now, if you operated without a trust account, right, the disbursement has been paid from your general, that's the only choice you have. You're now waiting for the client to react to the invoice and actually pay you back. And that's how you record that payment and then complete the whole cycle. If it was paid to you by your own personal money or someone else in your business paid from their money, then you have one more extra step, which is moving the money from your general to that third party who actually paid for the expense. That's the last part of the cycle to complete the whole transaction. So it started from them, you recorded it, and then at the end of the day, you need to pay them back so that the cycle is complete from that angle. Make sure that you have all the ledgers and journals updated as per Law Society's guidelines. There are two specific disbursement journals, one on the receipt side and one on the payment side, that the Law Society auditors will definitely look for. And in the ledgers, they obviously, both the receipts and the payments for a particular client get captured, so you need to manage that as well. So that's kind of the recovery portion of disbursements. Let's now move on to the next topic of what are the types of disbursements, and this is where we'll kind of try and see if we can kind of get like a small demo going. I mean, we're just going to use our software as a means to display something. We're not saying you should do it this way and uLaw is the only way to do. We're just going to use our software as a means to do that. So I'm going to take a small pause and I'm going to show you how to do a disbursement out of trust first, and then we will go to the general portion. So to do that, I'm just going to escape and go to our software. For this example, I'm just going to create a client. Let me create a quick client here. So I'm going to say add a new client. I'm going to say charge Timothy. I'm not going to fill in all this information. Let's just create a sample matter just for this context. Let me just quickly create a matter, and we're just going to show how trust is actually done. And so the most important thing, like, let's create a matter now. Let's say it is George. This is John. Let's say it's a small claims matter. I'm going to hit the save button. And we wanted to show the first example purely from trust. So let's now take a small retainer, right? A new retainer. And let's say the retainer is $500. Obviously, you need to say how it was paid. Let's say it was paid by check. I'm going to put the check. And you can say this was paid by George Timothy himself, right? And we can apply. Now, let's now talk about disbursement. So this, he gave you the check on the 20. Actually, I'm going to predate this because that will show kind of like a flow. So let's say he gave you the retainer on the 20th, and you actually had the disbursement on Monday, right? Like you went to the court and you actually paid a court fee. The way you would do that in any accounting software is there should be a way by which you can actually establish that payment out of trust account directly. So so you can just say the disbursements are paid on from the trust account. Let's say it is $50. Let's say you wrote this check number. It was a court fee, right? And it was paid to Ottawa Courthouse, right? And it was paid from your trust account, right? And payment, right? So let's now look at the ledgers and the journals. So when I click here and I look at my trust ledger, this is exactly what the law society is looking for. They are looking for, like, for this client, George Timothy, and this matter and the file number, this is exactly what they're looking for. The date, the particular, saying that that was a disbursement, it's a court fee, check number 78, $50, and that 500 has now become 450 on January the 27th. That's exactly what they're looking for in terms of ledgers. Now, when it comes to journals, right, let me go to accounts and show you the journals, how they will look like in trust. And I can just say document generation and go to journals, and I can do a, let's say we do a trust, if we do a trust receipt, I'm going to quickly do just a show only. You should see the retainer arriving for George, right? George Timothy, 500, that's the retainer arriving. You kind of show that. And if you look at the trust, so if I go to journals and I look at payments, and if I look at the trust, right, and I'm just going to do a quick show only, you should now see today the Ottawa Courthouse. So basically the information that they're looking for is the date, the method, paid to, who was it paid to, the purpose, the client and the purpose, and the amount. So if you look here, the date was 27, check number 78, Ottawa Courthouse, the disbursement reason, the matter, everything is, all the details are here, and the amount. So that's what they're expecting in the disbursement journal. So that kind of finishes trust. Now, let's focus on the types of disbursement, and then we'll come back to general. Now, the types of disbursements that we have that, legal professionals can basically do and recover are, first type is called billables. Now, billables are actuals. Like you spend X dollars, you're getting back X dollars if it's from general. If it's X dollars, you're reporting it's X dollars. So, it's both trust and general. You can do that, like, billables, and there's no problem. Court fee is a classic example. You can either directly write it from trust or get it from general. Next one is unit rate. Now, this one, you can only do it in general. You cannot do it in trust. The reason why you cannot do it in trust is, like for example, faxes, postages, like, all that stuff. Like, you are not charging in actuals. You're not charging him, if Canada Post is charging you 75 cents for a letter, you're not charging him 75 because your postage is on a unit. You're saying 5 postages at, $1.25 each. There's a markup. So you can only do that in general. Mileage is the same category. Like, you're charging for mileage. So you're saying like, hey, my travel fee is so much. Right now, I charge you, $1.50 per kilometer, and, it still be there in the invoice. It can only be done in general. It cannot be done in trust. Travel time is another form of disbursement that you can say, you know what, it took me so much time to go from Ottawa to Kingston, and this is my travel time hours, and you can only do it out of general. Okay. Now, recovery of expense on actuals, it can be done in both, trust and general. Recovery of expense with a profit margin can only be done in general. The classic example that I gave you was the software license. Like, you don't have to pass the discount that your software vendor gave you to your client, right? That margin, you don't have to do that. Outsourced consultancy on actuals, like, for example, you got a matter and you're working out of Toronto, but the court hearing was actually in Windsor. You didn't travel to Windsor. Some other lawyer or paralegal actually did that work for you. That is outsourced consultancy work. Like, that's a disbursement. So you're telling your client, hey, I'm billing you because I got this job done by someone else. It's like an expense to me, and I'm passing that expense to you. And if it's actuals, like whatever that other lawyer or paralegal charged you, if you're charging it back to the clients, it can be done with both trust and general. But if you have a small profit margin because you kind of worked out a rate here, but with your client, but this paralegal or your lawyer worked out a different rate for you, with a profit or even a loss, like with a loss margin, like that can only be done in general. So just to go over, billables is both trust and general. You can do it from both trust and general. Unit rate, only general. Mileage, only general. Travel, only general. Recovery of expenses on actuals. So the word actuals is very important. Every time when the payment is equivalent to what you're recovering, it can directly be done by trust all the time. But you can also choose to do it from credit, from your general. Maybe, you're getting good points, out of your credit card for your business. So it makes sense to actually do it on both. For accounting purposes, if you do it off trust, the accounting becomes much simpler, as we saw in the previous example. Recovery of expenses with profit margin can only be done in general. Outsourced consultancy and actuals can be done in both trust and general, and profit margin can be done in general. Now, let's go to the next, which is, this is what the Law Society expects from trust and general. We already saw, the trust ledger where, we kind of showed an example right there, like, how the trust ledger look like, and in the general ledger, how you need to show disbursement. Like, you need to break it down into HST and show, the whole thing. We have not covered general yet in the example, but you need to break it down and show. So let's now go through each of this as an example, because, like, it's one thing to put it in bullet points, but it's another thing to actually show it on how to do that. So we already showed billable in trust. Let's show you a billable in general. How will a billable in general look like? So when you pay out of general, generally what you want to know is there's quite a bit of information that you want to gather as part of that entry process. So when you pay out of general, I'm going to use application fee as a good example. And this account is set for Ontario, so that's why the tax is 13%, which is HST. So let's say you spend $100, right? You have a choice to either exempt tax based on if you're not. This is exactly what you're charging the client because this is what you paid. So you can say on the 24th, I paid this application fee. Who was it paid to? You can say City of Ottawa, right, was what paid to. And how did you pay for it? So you can say it was paid from my general bank. And you issued a check, and this is a check number. Maybe you paid it from your business credit card. So you can say, hey, it was paid by my credit card. And you can change that to credit card. And you can put a reference number, whatever the credit card has, you can do that. Maybe it was not paid by me. It was actually paid, it was not paid by the business. It was paid my owner's pocket, right? Like, it was paid. So that way you're capturing the information right here as part of the expense. This is what will be charged to your client as part of the invoice, and then you have a choice to recover it later. Okay, So let's now do a classic example of, credit card. So that's credit card, and it's all done, and you hit the save button. Now, when you hit the save button, what you have recorded is the disbursement as an expense. It's not recorded, right, as a recovery yet. The reason why is because you haven't invoiced. So let's just quickly raise a pre-bill and show you how you should report and then a good disbursement to your client. So in your invoice, you can clearly say that my disbursement, that's the application fee, is $100, subtotal to 100, 13% HST, adding up to $113, right? And then you say that that's the total of that bill, and you can say, hey, $113 in disbursement, we can recover it from trust, and that will be your trust balance. So when you actually raise an invoice, right, which I'm going to predate it to yesterday because I want to kind of have like a flow, right, raise an invoice and you can send it to him. Let's now look at the law society requirements in terms of, ledgers and then we can move on to getting paid. So when I click here and go on my general ledger, this is where I tell the date. Again, this is very important. Recording it for that client, that matter, that file number, very important. But in your general ledger, you're kind of stating that on 26th, that was yesterday, the disbursement invoice was raised as part of invoice number 2479, right? And you kind of indicate that, and you say this is the fees, and that's the balance that is owed, right? And then let's now look at the journal perspective. So if you go here, and if you look for your general disbursement, so I'm going to do here journal, and you say general disbursement, because this is what the client they are looking for, and you do, let me do a download. You basically have to indicate the whole nature of this City of Ottawa, disbursement that you put, the application fee. So 24th, it was paid using credit card. The city. So let's look at the top level the information that you need to capture. Date, because we said it's the 24th. Let's go back to the matter. We said it's the 24th application fee, right? So we want to capture that it was 24th. It was paid using credit card. The reference number, City of Ottawa was whom it was paid to, and there was an application fee. The matter was that. The amount split into taxes. Sometimes, you might have incurred an out-of-province expense. You might have a GST and a PST, right? So you want to split that and say the total. So that's the line item that the law society is actually looking for when they're looking at a disbursement payout journal. Okay. And then finally, now we come back to how to recover it. So let me raise. So I've already raised an invoice. Let's see how we get paid. To get paid, you can transfer that money from trust to general, and again, you need to record that. And let's transfer it, and then I'm going to record it. So I raised the invoice yesterday, so I can do the transfer today. Let's say it was an electronic fund transfer, and the requisition number was that, and I recorded it. Let's see how the ledger is actually going to look like. So we put the transfer here, but when we actually look at the ledger, now you will see the flow. Again, the information that needs to be recorded. So let's first look at the trust ledger. So the trust ledger, we already talked about the 50. Let's talk about the $113. You need to have the date. You need to have an indication that this was a trust transfer for an invoice, right? So you say trust transfer, and the disbursement is application fee, and the invoice number that you're doing it for that. And you can say it's George Timothy, $113. The new trust balance is reduced. And when you look at the general ledger, right? That's the trust ledger. When you look at the general ledger, it has to match up to the invoice that you created. So you said 26th the invoice was created. The trust transfer was actually done here. The two match. The client owes you nothing because everything was recovered out of your trust account. That's pretty much what is expected out of you from Law Society's compliance for billables, right, which are actually done from general account. Let's now do another example of unit rate. What is unit rate, right? Now, unit rate is, where you're telling your client that, let's do a sample. Let's say paid out of general. You can say fax, for example. Now, fax, you're not giving the amount. You are giving quantity. You can say 31 faxes, right, at $1.30. You know what? Let me make it 30. That way you will kind of see the amount. So it's $30 and 13% of tax, right? Now, the bottom part is the expense. You can say, hey, this was done inside my 4 walls of my office. No expense. So you don't have to record a disbursement expense for this. So that's where the unit rate kind of differs. Now, you might have had expense, like, maybe, Staples Business Depot charged you $2 to do that 30 fax. Maybe you could put that, but if they didn't charge you, it was done within your 4 walls, you can just uncheck that and you can just say save. So now that's how you do unit rate. So let's now look at how you bill and recover that. So I'm going to skip the process of pre-bill. Let's do an invoice. The objective is not to show our software. The subjective is to show the ledger. So that's why I'm just using our software as a vehicle. Okay, let me quickly do a trust transfer and recover that recovery. There you go. $33.90 was paid to me, and maybe I wrote myself a check and I did a transfer. Let's now focus on the ledgers, because that's the important part of the CPD, is to focus on what the law society is expecting out of a unit rate. So let me click on question mark, and let's show the general ledger. So in the general ledger, you want to show that the disbursements was faxed, the amount that was billed, and that's the balance owing, and the amount that was transferred from trust to make that $0. This is the key element that they are looking for, and we have demonstrated that in the ledger. This is what you need to capture. You could use any legal accounting software, Excel spreadsheet, does not matter. But this is the information that you need to capture: the date, the particulars, the fees or expenses billed on behalf of the client, the payment, and balance. So in the unit rate, obviously because you reported that no expense, there's no disbursement journal. There's only a trust transfer journal, to indicate that that there was a trust transfer, it was invoiced and then transferred. That's all you kind of indicate here. Okay. The next part that I wanted to show was mileage. Mileage to me is, our travel time is no different from unit rate. I'll just show you as an example, but we don't have to go through the entire process. So let's quickly do that. So you can just say action, paid from general. You can just type mileage, lawyer travel mileage, and it's just a unit. You can say 100 kilometers at 50 cents a kilometer. Again, no expense, right? You had no expense. If you want to put the gas expense, because you fill gas and use the whole gas, you can say that. You can say, I did $100 of gas, right? And 13 cents is the HST, and you can say how it was actually paid. Similarly, if it is, travel time, right? Travel time, same concept. You can say rate. How much time did you travel for? You can say 1 hour and 36 minutes, and how much are you charging per hour, right? And then you add the HST on top of it. So, to me, unit rate, mileage, travel time, you report the same way. There's no expense on it, so you report it the same way and you recover it the same way. So all three are, only from general. Let's look at recovery of expense. We kind of have looked at it. Let's look at what is important, the software margin stuff that we talked about. And to that, I'm going to use a simple example, the divorcement example that we talked about. So we can say, let's say it's like a miscellaneous expense. You can say divorcement software, right? And you can say the software costs $120 of license per client, and that's your HST. Now, they give you a discount. You can put that here of $20. You paid only $100. And how did you pay for it? Maybe you paid from your pocket, right? Paid to Disbursement Inc., right? And it was actually paid from your own personal pocket. You can record that and hit the save button. So now, let me raise the invoice, and then I'll show you the journal differences. So let me raise the invoice. The invoice is going to be for $120 and taxes and change, right? But the disbursement journal is going to be for $100. So let's capture that. So here, Disbursements software, this is what the client actually owes you, $135.60. And obviously, you can hit the question mark and transfer that money from trust to general, right? But the focus that I wanted to actually show is how the journals are going to look like. So let me finish the transfer, and now let's focus on the journals. So let me now show you Law Society compliance journals. I'm going to again go back to the disbursement journal, download. The Disbursements software only cost you $100. So you want to show that very clearly here. On 27, you paid cash. Like, the reason why you call it cash is because, it was paid from your personal, owner's pocket, right? So you pay cash. Disbursement software, $100, $113. That's what you report in your disbursement payment journal. However, if you look at the ledger, your general ledger, that'll be a little different. The general ledger will show you how much you actually billed. Sorry, that's my general ledger. There you go. How much I actually billed is what actually is being shown, right? $135 and the trust transfer that I did to recover for it. Okay. Let's now look at the last and final type, which is consultancy. Now, in consultancy, it's very similar to miscellaneous expense, but there are some other things that you want to capture. For example, if you say consultancy expense, you can say consultancy fee expense, whatever you can say. This law firm called John Law Office, which is out of Windsor, charged me $120 for handling this matter in Windsor, even though I'm from Toronto, or Ottawa actually. And I'm charging the client $120, or you could actually say, hey, you know what? I have negotiated a $150 rate, so you could do that. So you can actually pass on expense, or you can even go lower. You can say $100. You can give him a discount. So that's possible too. So this is basically what John Law Office charged you. You can record that, and this is a check number that you wrote to John. Right? But you're charging the client much lower, and you're actually taking a hit, right? Because you told your client it's going to be $100, but John ended up charging you more. Now, you cannot charge the client more, right? You have to charge him less. So that's a classic example of where you're taking a hit. We showed you the Disbursement example where you're making a profit, but this is where you take a hit. Now, at the end of the day, accounting is all about showing what really happened, right? So let's now go back, and again, for quick purpose, I'm just going to do a quick transfer, and then I'll show you all the journals and the expectations. So $113 is what the client is going to pay you for that, because that's what you told them it's going to charge, right? And maybe you wrote yourself a check and transferred. So let's now quickly look at the same example, the trust payment journal, general disbursements, download, and now you will see what you paid to John there. As a consultancy fee, while here in your general ledger, you will see that you only recovered $113 for the consultancy expense. Okay? So let's now go back and go to the slide again. So during the audit, the disbursement ledgers, both trust and general, are reviewed. It's very important you kind of have that. And a ledger basically consists of date, particulars, receipt, disbursements, and balance. So it's a running ledger. So at any given point of time, you'll have to say for every account how the trust money moved and how the general actually moved. You need to clearly report that in the ledger. Now, every transaction that was disbursed directly needs to be recorded in the disbursement ledger. Based on the type of transaction, it needs to be maintained in trust or general ledgers. Like, as we clearly said, like, if it touched trust, you will put the trust one. If it touched general, you will put the general one. Each ledger also has a running balance by date. You need to have that running balance by date. Following the sample of loss society, basically these are the two samples like that I just picked up from the bylaw 9, and I've just put them in this presentation so that you kind of have an idea what you need to maintain for these two ledgers. Let's look at the journals. The journals, there are 3 journals that basically are affected by disbursements. The first one is that I wanted to showcase is the trust disbursement journal. This is when money leaves trust and it's making its way to someone else, for example, legal fee or some, or like paying a land transfer tax. You need to, straight out of trust, you need to have all that stuff recorded in the trust disbursement journal. General receipt journal is where you kind of show how money came in from trust to general if you're doing a recovery. Like, for example, a disbursement was actually invoiced and you're getting paid, that would actually end up here. And finally, the general disbursement journal is the actuals that you're showing on how actually the disbursement happened, like rent and stationaries and all that stuff. Everything would actually go there. Okay. Now, is this enough? Are these 5 documents enough? Actually, no. There's one more document that's very important, which is called the fee book. Now, the fee book shows the date, the invoice associated with the disbursement, and the HST associated with it, or GST and PST, if you're from other provinces. Okay, and this, again, I took from the LSUC bylaw 9 to demonstrate, how it can be. Let's quickly do a fee book in our software and showcase the same thing. And, we're going to use this George example, right? Let's follow through the George example and showcase the fee book. You click on document generation, and let's do a fee book. And I'm going to do this month. And I need to follow this matter, which is GT 140-453. So when I do that, clearly you see the disbursement. The first one, if you remember, the application fee is there on the 26th. Then the second application, that's you only want to follow the Timothy George one, so that's the one. Then another one is the divorcement example that we showed, and then the fax that we recovered, and finally the consultancy expense that we paid to John needs to be shown here. So again, the headers for fee book are date, the client for whom it was done, description, separate the disbursement into fee and appropriate HST, and the total. So that's where you need to say that it was a disbursement. You need to separate and say which one is legal fee and which one is disbursement. That's very important that you show the two separately. Going back to the presentation. Let's shift gears and look at benefits of using legal accounting software. Legal accounting softwares enable you to record the event when they happen, as they happen. as you saw, one of the most important thing in disbursement is recording the event when it happens. The biggest issue that, we see in the legal community is the disbursement happens sometime, they are not recording at that time, and they forget it. So that means the chance of it affecting your bottom line is very high. You paid for it, you forgot to actually raise it in as an invoice, you're not even recovering the money, right? So recording the event when and as it happens is very important. So you want to have a very strong legal accounting software that can actually help you do with that. Recording the financial records and the bank records as close as possible makes reconciliation a very simple task. Right? Like, when you kind of come to that reconciliation date, and if you have not put your disbursements that were paid out of trust, you're obviously going to have a mismatch between what the bank is showing and what you have in the software. So it's very important that the line item 2 is followed so that reconciliation for both trust and general is very easy. Now, the good thing is all the audit-related documents, can be generated and let the software do the work based on the workflow. As you saw, like none of the time I was using some spreadsheet and actually filling the whole thing, right? Like, ours is one such, but any other software that you would go with, PC Law or any other legal accounting softwares that we're talking here can actually generate the document. Let software do the work for you based on the workflow. And finally, what is expected is compliance and accountability. Compliance means meeting the accounting standards and the records, and that accountability means making sure that the flow of the dollars has been shown properly to the auditors. Now, when you do that, a side benefit that some of the legal accounting softwares can present to you is analytics and the ease of use. You're basically saving time, and you can do analytics. You can say at the end of the day, how much money did I spend on disbursement? How much did I recover? Did I lose? Was it a profit machine, or was it a loss, or was it a net even machine? You can calculate that using some of the analytical tools and reports that legal accounting softwares have, and provide. So we have 3 more minutes before I want to open the chat line. I just want to go back and kind of look at the agenda again and kind of summarize the whole thing and leave with a very important message of what is disbursement and why we need to do that, and then we can open the chat lines. So we talked about what is disbursements and how to manage them, right? Basically, disbursements are client expenses. You need to manage them because they affect your bottom line. We talked about the benefits of doing it in trust account. We also talked about managing disbursements from general account, and we said, hey, general accounts have a lot more touch points than trust, and we talked about all of them. We talked about types of disbursements, and that's where I want to go to this slide. We talked about types of disbursements. We talked about billable. They can be done in trust and general. We talked about unit rate, which are like faxes, postages, where you say the number of units that was done, and you can only do them from general. We showcased an example of mileage, which is you basically indicate how, the mileage and then how much was traveled and you recover it. Travel time can be also expressed. We talked about recovered expenses on actuals, like software expense. We used Disbursements as an example, and we showcased that. And we also talked about outsourcing consultancy. We talked about the John Law office that was in Windsor, and we being in Ottawa, how we dealt with John and how we took John's legal consultation and passed it to the client, and how we can do that from trust and general. Finally, what is expected out of the law society when it comes to disbursement are those documents. So basically the two ledgers, the trust ledger and the general ledger is expected. What's also expected is the 3 journals, the general disbursement journal, the receipt journal, and the trust disbursement journal. And we also talked about fee book, where we need to capture that disbursement on how the invoice was raised and done. So I think we are perfectly on time. I'm going to open the lines for chat. If there are any questions, then I can take them. I know disbursement is a pretty tough topic, but if you have any questions, I can take them. please use the chat lines to just type your question, and we'd be more than happy to answer them. I can either talk to it from the slides or even use an example. While we're waiting for questions, one of the key benefit I mentioned was analytics, and I want to show some of the disbursement analytics that we have. Let me go here. So we talked about expenses, so on fee book. So some of the key analytics. This is like data that you already have. Like for example, you can look at expense fee book by category of clients just for this month, and you can do a go. And these are all the clients who you billed this month, right? And you can look at it as a pie chart and say, oh, looks like Alex Johnnyson was my favorite client this month. We billed him enough and we got good recovery. Adam Packman was the next. Then there was all these small clients probably looking very similar, and the rest was about 19.7%. That's analytics, which is it's pure gold that you can mine. Similarly, looking at disbursements on the expense side, right? You can just say expense by client, and you kind of get a view of where did I spend a lot of my money. So it looked like business expense to run the business this month was that much, but for Joe Fernandez, we spent this much money. George Timothy, one that we created today, $226 is the expense that we spent, right? And it got recovered, right? I remember there was two expenses for $100 each, and that's why with HST it came down to be that much. Oh, that's a good question. How do we report tips for a meal at the disbursement entry? Beautiful question. So let's go to that. So when you are in Matter, ethically it's not correct to charge tips to your client. So that's where, it's a marked down expense. So you can use miscellaneous expense, and you can say meals. Let's say you had a business meals and you want to charge, and let's say that meals cost you $100, and you exactly want to charge him that $100. So you can put here 100 and 100, and it was paid using my credit card, so I can just say that, right? Credit card, and it was paid to, I'm just going to say, La Cuisine Italia restaurant. Now the tip is a disallowed expense. You can say $20 of tip. You're extremely happy. So the expense becomes $113, $133, while you're charging the client only $113, and the tax remain the same. That's how you would report a tip. So when you do a tip, going back to Law Society's requirements, your disbursement journal should still capture that, the same way. So let's look at an expense journal. Let's go to the last item here, the meals. Here you go, meals. And we captured the $20 separately. We captured that as disallowed expense, right? We captured it completely separately, and that's how you would actually capture a tip. So the next question, where you work is another jurisdiction. How do you show place of supply in your bill and prove no HST is collected for revenue purposes, for Revenue Canada purpose? Well, again, very simple, right? When when you did a particular disbursement, and I'm going to take this court fee again as an example. Say, you can say paid from general, and you can say court fee, right? And when you put $75, you can exactly mark here saying that was tax exempted, right? And that basically will help you. And we'll show you what legal accounting softwares generally do. And we do nothing very different. Is we have HST accounts that we manage, right? That was HST payable. So if I would go into our chart of accounts and go into taxes HST payable, you would typically see all the HST that we have been collecting. See, look at the consultancy, the meals, everything. You did not see a court fee here because we exempted it from tax. And this is how you would report to CRA using your tax report, right? You would do document generation, taxes, HST, and you would do a download, and you would see that line item will be missing in that because it was HMT accepted. So here you go. You see, you're clearly seeing all the disbursements that you recovered and this, and you see the court fee is missing because it was $0. Hopefully that answers that question. We have about another 4 more minutes if anybody. Somebody said, is the PowerPoint of this available? We will be actually posting the entire webinar on YouTube, and you can go to our blog and you'll be able to see that. Our blog address is blog.uLawPractice.com. That's where we generally post all our previous webinars as well. If you go to blog.uLawPractice.com, here you go, disbursement demystified, this announcement. But, you would generally see the previous webinars, and you can go and access them by clicking, and then, we will show you the YouTube video will be there. So right now this one is just being done. That's the YouTube video for that webinar, so we'll be posting it there, so you should be able to see it there. There you go. That's the YouTube video. That answers that question. We have a couple of more minutes, but if anybody has questions, feel free to ask. I'll still stay online. We'll keep the agenda. Actually, we'll keep the conclusion. So that way, these are the benefits. For people who don't know us, we are a legal accounting software based out of Ottawa, Ontario. And okay, I have a question here. If you use legal software like Litigator for more than one client, can you bill the full amount for each client, or do you have to break them up? Oh, great question. Great question. There are a couple of ways you can do that. Now, when you go to, and I'm just using our software because this is a tough question. I'm going to use our software to demonstrate that. So always what you can do is, and all legal accounting softwares will allow you to do that. You can mark expenses directly as office expense. Like let's say you bought bulk license of that software, let's say Litigator. You can say I bought Litigator, and the invoice that they gave you is that, and you can say it cost me $500 for 5 licenses, right? And you can say how you paid for it, and Litigator Inc. Corporation, and when you paid for it, maybe you wrote them a check, and you can even print that check, and you can submit. So that's how you would do the office expense portion, right? Once you have finished the office expense portion, when you come to matter, you have to put that as a disbursement. So you can say action, miscellaneous expense, and you can say litigator expense. Here you would put $100 because it's one license. Because you put for 5 license, but here you would put 1 license. The bottom part you would leave it empty because you don't want to double count. So you already have counted it there, so you don't want to double count. So that's the way you would recognize your payment, and then you can put this and you can hit the save. I mean, this is common practice in all legal accounting softwares. Like, you put it as an office expense, in one place, then you come to the matter and then break it down and charge your client and then recover them one by one by one by one. I hope that answers your question, Randy. It'll be a nice habit to send that email. It'll be a good habit because we will kind of mark that. But if you have kind of marked your name, which I see, Marina and a priori, we should have you marked. But like it's a good habit to just send that email. So just want to remind all our viewers, like this is 1 hour of CPD, professional hours from LSUC. You should see our presentation in YouTube, hopefully by the end of the day. And I want to wish you all a very good weekend, and look forward to seeing you in our February webinar, which are coming up, very soon. We have 4 webinars coming up for you in February, and we hope to see you in those.